right? They've indicated to us that they've tested goodwill for impairment, but they have recognized the impairment, the 385,000 amount, but they did not allocate this to goodwill, being incorrect. Right. Okay, so guys, what we need to remember is that they provide us with information, but we also need to look at the recon itself. Okay, so when we look at the recon in terms of our impairment, note 5, we have identified that the total is 385,000, right? No problems. But guys, when we look at this, they've allocated to land, okay? But they indicate to us that they have classified this in profit and loss. But if the land is based on the revaluation method, shouldn't the impairment be recognized in our OCI in terms of land? Yes, guys. Therefore, if our land is recognized based on our revaluation model, our revaluation surplus will be recognized in our OCI. They've indicated to us that the impairment amount was recognized in profit and loss, and this is incorrect. Why? Because this should be through OCI, because this is based on our revaluation model. And when we look at our reconciliation, another thing, no impairment allocated to vehicles. Not sure why not, guys. Incorrect. They need to allocate this as this forms part of our cash generating unit. Therefore, we need to indicate that no impairment was allocated to our vehicles, and this is incorrect. Why is this incorrect? Because our vehicles form part of our CGU. Next, when we look at the recon, guys, how do we allocate impairment losses? We allocate impairment losses based on the carrying amount of the assets. Okay, now based on the carrying amount of the assets, therefore if we look at the amounts, 105 on the 8.5 million, 205 on the 12.5 million, 75 on the 10.8. The correlation doesn't appear to be correct, guys. Therefore, this is also an error. Now, you can make use of your calculator if you want to. From a timing point of view, if you don't have time, just move on. That we know that the impairment should be proportionately allocated based on the carrying amount of the assets in our CGU. And when we look at the information provided in the recon, this is ours, it appears that this is not in line. Therefore, this might also be incorrect. Incorrect. Right. Okay, next. Look at the impairment block or column, guys. We have touched on all of the necessary details. One that I did not identify immediately, and I'm going to be honest, is the fact that there's discussions with the experts in terms of our land. Therefore, guys, if there's discussions with the experts in terms of our land, we can't really impair the land to lower than the fair value. Remember, IS 36 paragraph 105. Now, I'm going to be honest with you, I've missed this one first time. If they indicate to us that they had discussions in terms of the fair value, we can assume that there's no change in terms of the value of our land. Therefore, technically speaking, we cannot impair our asset to the lower of our fair value. Right, guys, now we can move on and we can tick off note 5. Note 6. A delivery vehicle was involved in an accident and was written off by the insurance company. The carrying amount of the vehicle on the date of the accident amounted to 218,000 and the insurance company paid out 228,000. When we look at the reconciliation, remember they have included this proceeds received, the 228,000, right? they've indicated to us that the accident happened first and the vehicle was written off, and then they received the proceeds from the insurance company. Okay, so when we think about our journal entries, guys, first, what will happen? First, this asset should be impaired. Why impaired? Because this asset was written off, right? Then, secondly, we need to take out the asset at carrying amount from our PPE, and then only are we allowed to recognize the income, and this should be in our profit and loss. Therefore, first we need to identify, guys, that the derecognition in terms of the vehicles to include this at proceeds was incorrect, right? Derecognize. Proceeds incorrect to derecognize the asset, right? Then we need to indicate that the asset should be derecognized, taken out at carrying amount. But before we are able to do this, they had to first impair the asset due to the fact that the asset was written off. And then they are able to derecognize. Sorry guys, my hand is pretty tired. Now I can just imagine how yours should feel. They can derecognize the asset at carrying amount and recognize the proceeds in the profit or loss. But you will identify in the solution there's quite a lot of marks, guys. I try to work through everything. Okay, so guys, when we look at this, quite a few things that we can actually identify which is incorrect. They did not impair the asset. They did not impair they did not derecognize the asset at carrying amount. They've derecognized the asset and they've used the proceeds. Therefore, we are now able to tick off 6, but before we move on, let's just ensure when we look at vehicles note 6228, right, we can move on. We didn't miss anything. Now, note 7. This relates to a business combination. When we look at our recon note 7, they have included land, building, machinery, and vehicles. And if you remember correct, they've indicated to us that this is included based on the provisional amounts. But guys, when you look at our timeline, our year end is December. We are busy with the audit in February. Therefore, this is still within the period where we can include adjustments. Therefore, guys, they need to adjust the figures. To make use of the provisional amounts is incorrect. Therefore, let's include this, and this will be our note 7. To use provisional amounts is incorrect, and if they identify this before authorization, we need to adjust our figure to our actual final amounts in terms of IS 10 paragraph 9. This is an adjusting event. Guys, again, when you look at our timeline, you can also state dates. Remember, the purchase price was finalized on 20 January. And we are busy with the audit in February. Therefore, our annual financial statements have not yet been authorized. And we can tick off 7. Let's move on to 8. Note 8. During the current financial year, the group purchased a land and erected wind turbines to establish a wind farm. The following costs were incurred in the project. Administration and general overheads. Now, guys, immediately this should ring a bell. When you refer to IS 16 paragraph 19, it indicates to us amounts that should be expensed. Therefore, this is incorrect. We cannot capitalize the admin and general overheads. Immediately indicate this is our note 8, and we cannot capitalize the admin and our general overheads. And this is in terms of IAS 16 paragraph 19D. Therefore, the fact that they have capitalized this is incorrect. Cost of the land, yes, we may capitalize this. When we look at the reconciliation 1250000, they have included this 1250000. The relocation costs, can we include this? Yes, guys, in terms of IAS 16, we may include the 350,000, the cost of wind turbines machinery. Yes, in terms of IAS 16, group engineers that directly worked on the project. Yes, we may capitalize this. And then training costs of staff, this 350,000. May we capitalize this? No, we may not capitalize this, guys. Therefore, this should be expensed. Exactly the same as by our previous bullet points. We may not capitalize the training costs. Therefore, the fact that they have capitalized this is incorrect, and this should be expensed. Okay, so when we look at this, guys, in terms of the admin and general overheads and the training costs should be expensed. Therefore, we can indicate that the amount that they have capitalized, guys, is incorrect. Okay, guys, I think that this is actually a pretty good question. It actually made you think about quite a lot of things. Please email me if you struggle with these questions. Good luck.